Hi, welcome to the Market Alert for Friday, the 26th of July 2019. So Tesla tumbles, Boeing battered, stocks and bonds dump on Draghi disappointment. And speaking of Super Mario, this is what came out yesterday just before he spoke. Watch live, Draghi overpromised for Lagarde to deliver ECB presser. And then European bonds collapse to record lows after dovish Draghi, so that means more printing of money, more lower rates, will go negative actually in the Eurozone, and then ECB set stage for September rate cut. Will examine QE tiering in pursuit of inflation target, which means that inflation isn't high enough, so they're going to print more money. And ultimately, the only way they're going to get this inflation that they want, and they want the inflation because then it will actually reduce the debt. That's the idea behind it. And the only way they'll ever get this is by consumers getting the money and not the banks. So let's see what happens. But that's the stage set for September now as we head into the summer. So let's have a look at the Dow for yesterday. And as I said at the outset of this week, the market's waiting for Powell. And you can see this reflected. The market's sideways, and it's one of sitting on hands and waiting for Wednesday of next week to see if Fed reduce rates by either a quarter or 50 basis points. So the market's likely to churn back to the upside today. Yesterday the market moved lower, and this was because of, let me just find this for you. And here we go. According to the newswires yesterday, the drop at the start of the trading was not only Draghi led, but also volatility collapse, as a large VIX call buying over the past 2 days is a definite change of character in the VIX options market in an otherwise sleepy tape. And obviously referring to how quiet it is this week. But yeah, there was somebody yesterday and over the last few days that have been buying call options on the VIX and the anticipation of prices dropping, and that's what you saw initially. But of course they managed to find support. You'll see the buying pressure bars coming in at this level, and then prices turning around and moving back up on the overnight there. Like I say, it is a sleepy week, and as I said at the outset of the week, that the market is desperate for Powell to reduce rates to give it its next move to the upside. And it'll only be short-lived when he does, and in particular if he drops it 50 basis points, well, it would just be financial suicide, because after the initial pump to the upside, what is there left without another rate cut or the offer of printing more money to keep the market moving to the upside? But overnight prices have managed to get back above the 200 bar moving average and are now heading retaining the sideways move that we have seen this last week. So it's just a bit of a tidy. You can see the defined trading range there for this market at the moment. So there you go. And the pound, well, again, as I said, it's everything's waiting for Powell. You can see this reflected yesterday. Barely any movement in the pound. Pound probably doesn't know what to do with having Boris Johnson there either. 53 pips is a dire trading range for this market. And again, you'll see this in the price chart there. Again, not too dissimilar to the Dow, just the opposite. Down in the lows as opposed to on the highs, but stuck in a trading range as well at the moment. There's no major news today. There's the advanced GDP. This is out at 130. It's forecast 1.8. The previous was 3.2, and that shows you the global slowdown in action there. And if you go through zero hedge, you will see nothing but bad economic data that's been coming in for the last few months. It just seems to be getting worse, which is obviously why Trump wants to preempt any sort of early recession by reducing rates, and also ultimately to keep the stock market on the highs. If the stock market's on the highs, that way it gives the impression that everything else is fine in the economy. Meanwhile, Bitcoin, as I've also mentioned yesterday, is stuck in a sideways move as well. We're heading into summer. It's not uncommon. The 4-hour is just slightly lower, but still sideways. And then the 15-minute yesterday was very sideways, with the odd move to the downside and the odd spike. As I said to you the other day, it's become spiky. You can see the market going through the 200 bar moving average just after the close of the session times that we look at, and then reversing and then making its way back through here. So we step back and look at the bigger picture. We are going into a bit of a sideways range. You can also see that the range of the bars have narrowed as well, so not worth participating in the smaller time frames at the moment in this market. And then finally, Deutsche Bank managing to still move to the upside. Incredible that this is still attempting to move to the upside and filling the gaps from the bad earnings figures that they had on Wednesday. Incredible. And implied at the moment, still pointing to the upside. Market's still above the 20 bar moving average, as is the implied volatility below the 20 bar moving average as well. So that's still pointing to the upside. We've got 1120 up slightly yesterday, 1146 as the market started to move lower but was then pulled back. So up marginally, but still below the 20 bar moving average in the implied and above in the prices. And the yield has turned back to negative on the 3-10 month. So again, still predicting a recession coming down the line. What we want to see as we head forward is a massive spike back to the upside to these sorts of levels. Then we'll know that it is en route. But in the meantime, it's still signaling that coming down the line is going to be very difficult trading conditions and recessionary conditions as well. End of the business cycle. It's the longest now in as far as the markets are concerned. It's over 10 years, so it's the longest business cycle in between recessions as well. Okay, on that cheery note, I will call it a day. It's heading into the weekend, so have a good weekend, and let's get Monday here and into Wednesday so we can get some volatility back in the markets. With that, as ever, thanks for watching. See you in the next one.